Hey, what is up, everyone? Welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. In today's video, we're going to be taking a look at the stock market and the Magnificent Seven stocks because we have had extra volatility, to say the least, in the markets earlier this week. And as you can see, we are in extreme fear on the CNN index. So maybe we can find some better value opportunities. We're going to go through that in the charts today. And on pie vesting, it's finally dipped below 50%. They don't have a neutral, they just show fear. So it is finally dipping down into that territory. If anything about crypto interests you, I do a few crypto videos every week on Bitcoin mining stocks, the state of Bitcoin, the rainbow chart, some altcoins time to time. But right now, even crypto is in extreme fear. And why wouldn't it be? Bitcoin had a 30% correction, and fear and greed is still in a downtrend. So until we have confirmation of an uptrend, I think lower prices or staying around the level Bitcoin's at will probably be what we see in the near future. But let's start off with the S&P 500. Now, you guys are used to me using a different buy-sell signal indicator. I wanted to flip it up because this one that I have on, which is called UT Bot Alerts, is more of a confirming indicator. But we have this other one called 1020 MA crossover. Anyways, you can see here that the S&P has been having a correction to the tune of, well, it fell almost 10%. So every year in the S&P 500, there tends to be one or two decent corrections that happen, whether they're 5%, 10%. So possible dip buying opportunity. And when this stuff happens, you're going to hear more news about incoming recession, this and that. Guys, until we have confirmation in more ways on the charts, I'm not sure I quite buy that this truly was the top. We are going to go over the yield curve. I think it is possible. Now, again, nothing here is financial advice. I don't know what the future holds, but I do think it's possible we might even get back up to, if not beat, all-time highs before the true rollover starts. And I'll get into why I think that is later on. But let's zoom out to the weekly, see what we got here. So on the weekly, and this is why I have on Heikin-Ashi candles, cut out the noise. On the weekly, you can see the sell signal still playing out. Does it not look like it possibly wants to come down to this 50-week moving average at around the low 5,000s? However, it is finding some good price structure support from back here. So maybe it does. We will see what happens. Sometimes these things go in three waves down as a correction pattern before blasting off. So if there was to be another correction down another 5%, that wouldn't shock me. Let's get into the VIX, the volatility, and the VIX spiked. And guys, this is a pretty rare event for the VIX to spike that much. We've talked about this, that you want to look for deals in the market and opportunity when there's fear. And I've also brought up this VIX index, and the VIX has spiked up to levels that are rarely seen. The last time we saw this was, of course, the COVID sell-off. And I mean, there were some other times that it was almost at this level, but then you have to go back to the great financial crisis, or even, I'm wondering, the dot-com bubble, not quite. So that surprised me. But either way, this is the third highest recorded VIX spike that we have. So it is possible that more downside is coming. I think, if anything, the way I'm reading this is that we are starting to see increased volatility in the markets. And with increased volatility, you're going to see violent downswings and violent upswings. And be careful of that, because once we start going up again, whenever that happens, you have to listen to what people are saying. They're going to be talking about how we're going to have a soft landing and there's nothing to worry about. Once the narrative changes to all hunky-dory, that's when you want to be careful, because if we continue to see these volatility spikes, watch out. We also look at the VIX divided by the VVIX, and anytime we're up here, that tends to be good times to buy. When we're down here, and this is just, by the way, I put it right here, the volatility of the markets divided by the volatility of the VIX. And so when we get these spikes up here and I see a sell signal, to me that says, okay, the market's looking at possibly turning back to the upside. I know it's inverse and flip, but that's the way you read that chart there. The 10-year divided by the 2-year. This recently just touched and even peaked above the zero line. This tends to uninvert. This is the yield curve when the Fed changes rates, and I'm really simplifying it here. There's way more to it. Do that research if you will, but I want my channel to be simpler, or for at least people to understand. And just the essential question I had for years while watching so many of these stock and crypto videos is people don't say, and of course you have to be careful with what you say because nothing is financial advice, but they don't say, hey, I like this time for value, or hey, I think things are overbought. Like, let's just keep it simple and talk about those sort of things. Yes, we can get into where we think the market's going, but oftentimes people get too much into the weeds of bonds and banks and all that stuff, and this channel is not going to be that. So I want to make it more for the casual viewer, someone who has maybe half an hour or less, like, hey, is this a good time to look for value or not? Let's just answer the most simple questions. So when the yield curve uninverts, typically there is a recession soon to follow. Now, the yield curve, the 10 and the 2-year, it's incurring what's called a bull steepener right now, which has always led to a hard landing. So that's probably going to be what happens, somewhere in the range of a 30 to 50% correction. Now, I'm not saying that's imminent. And right now it's testing that zero line. So do keep an eye on this. That's why recession talks are going to start popping up soon. You can see, let's actually turn this buy sell signal off because it's creating a lot of noise on the charts. This was 2019, just a tiny uninversion. This was 2007. And these, when they uninvert the yield curve, it's really close to rate cuts, 2001. And I'll show you that here on the S&P chart. Let's take a macro view. This is the dot-com bubble right here. And when the Fed cut rates, should we put this on log? That looks better. When the Fed cut rates, it was really close, like within a month or two of when the yield curve uninverted. And as you can see, the bottom of the market was within a couple of years, but there was a lot of downside happening as well. And as you can see, it's not always easy to catch because it'll test these moving averages and you'll think, okay, this was the final sell-off, but I don't want to miss if this continues to break out and go up, but then it doesn't. So that's why we use buy-sell signal indicators. You can even put it on the monthly. I'll show you a little trick here. Let's do this. If you put it on the monthly, cut out the noise. Try to cut out the noise as much as possible. Pretty darn close to where the bottoms are. Now, obviously, there's going to be times where it's going to be lower than the time it's signaling before, but overall, it tends to do pretty good. So, anyways, great financial crisis. You can see the rate cut, but it still went up a little higher. COVID, okay, this was a COVID dump. Rate cut after holding higher for longer. Now, of course, nowhere near as bad of inflation problems, but it still went up higher. So I read somewhere or saw a chart somewhere on X that within 2 to 4 months, there's typically a top after the rate cut, and then you truly see which direction it's going. Now, this is on average. Things can always be different. Maybe it takes 5 months, 6 months, whatever. But 2 to 4 months, if the Fed is going to cut rates, and let's go actually over to the, we're on crypto right now. Let's go over to the rates chart right here. So this is when they're holding it higher for longer. The Fed's talking about cutting rates in September, not holding an emergency meeting. Let me hydrate. Not holding an emergency meeting to do a rate cut yet. That's a good thing. Now, if the Fed is doing small rate cuts, then I'd say there's less a reason to worry. But if they're cutting by 50 to 75 points, I would say you want to be on alert. And from September, if we have 2 to 4 months, that puts us out towards the end of the year. So I would not be surprised if we continue to see volatility and we possibly see some of these stocks or cryptos start to shoot up towards the end of the year. And that's what I'm watching for. Again, you never know. Maybe things are truly just dying from this moment. We'll see. As far as the unemployment rate, this is another part that's concerning. This is obviously curling up. It broke the 50-month moving average, and typically when it starts curling up, there will be a point where it just shoots up. Things get really bad. The Fed tends to cut rates a little too late, just as they hold on a little too long. And have whatever view on that you will. The way I look at this, to try to simplify it, is we have two choices on our hands. We can either cut rates too soon and possibly get higher inflation or multiple waves of inflation like we had in the 70s. They had 3 inflation spikes. We can either ignore rates, make things easier and have that, or the economy needs to be driven into a recession in order to make things better sooner. So right now, I think they've just held what's the expression? They've held the balloon underwater for too long. The balloon's getting bigger and it's got to pop out. And sadly, we're going to have to see some economic downtimes. However, on this channel, we look at fear and emotion as an indicator. We try to look at things objectively and go by what the data is showing us. And the data is showing us, recession, hard landing's probably coming, but we don't know when. It might start, guys, it might start 6 months from now. It might start a year and a half from now. But until then, you can't just stay completely out of the game and miss out on incredible possible opportunities. And speaking of which, let's get into the Mag 7 stocks. I only talked for 12 minutes, my God. So anyways, the Mag 7 stocks, let's turn on our buy-sell signal indicator, and we'll go over to the weekly. We don't need to be on the monthly. So Nvidia, you guys know it's gone up like 1,200%. But recently, after hitting this level, and this was, by the way, really close to where Nvidia had the 10-to-1 stock split. It used to be 10 times more. Nvidia was trading at 1,038, 1,040. Excuse me, let me hydrate again. And right now, after it did the 10-to-1 split, something important for you guys to know. I had a buddy of mine say this, and this is a learning experience for you guys. All because a stock does a 10-to-1 split and goes from 1,000 to 100 does not mean it's cheaper. What you have to know about is something called market cap. It has the same market cap as it had before. Well, not the exact same, but when it does a stock split, it's still the same market cap at that time. And so because I had Nvidia shares when Nvidia was worth $1,200 and they did 10-to-1, what happens is I get 10 shares of Nvidia worth $120. So I haven't gained value. I haven't lost value. Nvidia's not, my stock isn't cheaper. They just cut it. And sometimes that can create a psychological effect where people like my friends say, oh, it's cheaper, I'm going to buy some. And it kind of drives up the price. So stock splits in the long run tend to be a good psychological factor, but ever since then, Nvidia's had a correction. On the weekly, no confirmation of going back up. Let's see on the daily. So Nvidia on the daily, you can see that it got down pretty close to the 200 moving average. Let's take a look at after it had a last decent correction. So right here, after Nvidia went up, it had a decent correction. So what we can even do, you can click this tool. This is a Fibonacci retracement tool. You've probably seen people use it before. Try to get it as close as we can and make sure that, of course, because I'm on log, make sure it's on log scale. And what do we see? Something is, by the way, hey guys, I'm sorry, I might have to switch buy-sell signal indicators, or maybe we'll go with the RSI and see if there's some bullish divergence and if strengths, or if the strength is bottoming out and flipping. But what do we notice with this Fibonacci retracement is that it corrected down to the 0.5, even the 618 fib. Okay, the 618, you'll look at it as 61.8%, but that's where the candle body got and no lower. And typically, when I look at charts, I've seen this a lot. When a correction happens, if it is able to, from the most recent bottom, not do a double bottom, but actually like get strength at the 618 or higher, I have higher hopes for it to be bullish. Now, it's usually even stronger when it corrects up here at the 382. Those movements are better. Oftentimes, even in macro moves, you'll see it have a 0.5 correction on the fib and then go bigger. So right now, I don't think it's over for Nvidia. It is showing some weakness after running into this light blue line is the 100-day moving average. So right now, we'll wait to see what happens. Short, medium term, I think this is decent value for Nvidia. Even super long term, Nvidia is a stock I like down the road. But after all the talks I was giving you and the details, the pointers about the recession, guys, if a recession is to take place, do not be surprised if you see the top stocks in the world fall anywhere from 30 to 60%. That's kind of my base case. And I know that sounds crazy. Like if Nvidia fell 30 to 60% and ended up, well, where's that price structure down here? If it fell 60% and went down to $50, that seems crazy. But that is what's happened in prior recessions of stocks like Apple and Microsoft and Amazon. So I'll show you that in the chart. So right now, some possible value with the RSI. It did bottom out, but wait to see what it does. You see how it's still in this downward trend? If it starts to bottom out and then go up, then you see the strength flipping. Okay. Also, if you see it bottom out, let's say the price does go lower, goes to the 200 moving average and the 786 fib, but the RSI stays higher on the daily, that's what's called bullish divergence. If the price is lower, RSI is higher. We just don't have confirmation quite yet. So we'll wait and see. But there is, hey, if you were wanting Nvidia when it was here at 120 and right now it's at 100, okay, you're getting a 20% discount, 15, 20%. So looking good for some value on Nvidia. Microsoft, let's zoom out here on the daily. You guys probably saw that, way oversold. Guys, look how rare it is for Microsoft to be under the 50 level on the weekly RSI. We're on the weekly time frame right now. It's not often it's down here. Now, when it does get down here, as you can see, sometimes we can stay low for a while. And by the way, the reason I show moving averages is because between the 1 and the 200 week, very rare time to get Microsoft at great deals. Yes, it can go under, but very rare time to get some deals. Microsoft right now on the weekly, and let's drag this fib out, man. Let's drag this out. I might do a new fib because it got above this 1618 at 434. It hit our target. Maybe we'll draw a fib from a different spot, and then we'll draw from right there. But Microsoft got down to the 50-week moving average. Let's take our fib tool and let's draw this time from the low to the high and see what correction it has right now. So not only at the 50-week, but remember what I was talking about, guys? It has a 382 correction. So if it's going to stay up here at the 382 50-week and then bounce, to me that looks pretty good. Okay, and overall with stocks, the 50-week moving average tends to be a nice dividing line on whether assets are bullish or bearish. Now, of course, oftentimes you'll see something in Apple. We're going to see that real soon. It came down recently, months ago, hit the 100-week and bounced off. Typically, overall, when something breaks under the 50-week, usually it's a bearish signal, at least for however long it takes to get back above it. So right now, showing some support. Let's look at the daily, see what we got on the RSI. And the RSI, man, it hit oversold. And the last time the RSI was very oversold, you can see here, look at this, guys. You see where the RSI dipped, okay, and how the price went lower, but the RSI went higher right there. That's what I'm talking about. That's bullish divergence. Strength going higher, price going lower, and then boom, we were out of here. And Microsoft had a nice move from down there. If any of you caught it, 20%. So that's great. So going to wait for confirmation. Are we going to get something really nice and clean like that? Bullish confirmation? Maybe, maybe not. It's possible. Sometimes it's more of a V recovery and it just goes up. And plus, it's sitting here at the 200-day and that 382 fib. So we will see. But if we see strength starting to curl back up and get above that RSI, that looks pretty good. Apple. Let's go to Apple and take a look. So Apple holding up its strength better than the others. You can see it's still above the 50. And something to note, you guys may have seen in the news, or maybe not, but Warren Buffett sold a buttload of his Apple stocks. I believe like half of his holdings. And he says he still loves Apple, but at the valuation it's at, it makes more sense for him to look at other things. And supposedly Buffett's getting more into bonds, so he's playing the long game. And again, doesn't mean this can't run up higher. But if someone like Warren Buffett is selling his Apple and he's one of the largest, if not the largest Apple stockholder, you want to pay attention to that stuff. So right now, Apple, it's above the weekly moving average. The strength still dipping down very strong. Let's see what it is on the daily. And as you can see on the daily, man, look at this right here again. Higher strength, lower price, bullish divergence. Are we going to get something like that happening? Where it's possible this was the dip and maybe we get one more flush, people will freak out. If that happens and we're seeing higher strength across the board on these stocks, guys, I think a violent, volatile rebound is going to happen. And all of a sudden this recession talk, you're going to hear it disappear from a lot of people and everything's going to be great. Again, be careful of that. So right now, Apple testing the 50-day moving average, and we will see. I don't love it right here. I would like if it came back down at least to the 100-day. Let's draw a fib just like we did for the other charts and see what correction we have. So 382 correction on the candle body. That's great. It did wick down to the 0.5, had that 50% correction, and maybe it's just V bottoming or V reversaling out of here. We'll see. So if you were able to catch some Apple down here at 200, congrats. Not long ago, I was telling you guys about how the 50 is typically the line in the sand. When Apple recently got down to this 100, I said, hey, even if it goes lower, this is typically great value for Apple. We only see this on average, at least over the last decade and a half, once every other year. And by the way, as I was talking about before, I wanted to make sure I address this, how stocks can have violent dips in recessions. Now, Apple in 2008, overall from its peak to its low, 60%. Could you imagine something like that with Nvidia? This was the dot-com bubble. What happened with Apple? 80%. Now, I'm not saying that is going to happen with Nvidia, Microsoft, but here's the perspective I think would be important to have is if any of these Mag 7 stocks, outside of Tesla, in my opinion, are going down over 40, 50%, pay attention. And yes, it seems scary at the time and people are talking about the sky falling, but you don't know if it's going to bounce off the 40. That's why we use indicators, by the way, like the buy-sell signal indicator, like the RSI. You don't know where exactly it's going to bounce, whether down 40%, 50, 60, 80, extreme situations. But you don't want to miss out on those opportunities. So right now, the homework for you guys, I'm going to keep saying this, make a plan right now. So if we do get a recession, a hard landing, a 40 to 50% downturn on the S&P, even a 35%, I don't care, that you will be ready and be able to look at things objectively without bias and emotion. You want to look at things with a plan and stay within your plan. Of course, please don't invest more than you can afford to lose and make risky choices. So let's move on to Amazon. Let's get going here. So Amazon, I drew this fib in a different way before. You guys have been seeing me draw from the low to the high. Now we're drawing from the high to the low because price is still within that range. It got above its all-time high, just peaked above, and then it had a massive correction. So Amazon, it was looking to possibly go higher, and it came down 25%. So think about that. Amazon very recently has been 25% off. Sounds pretty great. This stock, at least from everything it seems, with the balance sheet and its financials, seems like a pretty good stock. So came down to the 100-week moving average, and as you can see, the RSI is still going very oversold. So again, it's something I'm possibly looking for is, I'm going to keep saying this, is that double dip on the RSI. Is the RSI going to just dip down again, but we get a lower price? Whether we get a lower price and bullish divergence, or we get a higher price and higher base, both those things would look bullish to me. So right now, Amazon, it's right by the 786 fib and trying to bust through it. Now these doji candles, what those mean is it's undecided right now. It's undecided. It's not showing strength of wanting to bust through it. We'll see if all of a sudden buyers start spawning in, but if it continues to not show strength and be undecided, I would not be surprised if it got down to this 149 level. But again, we don't try to predict bottoms or anything like that. If you loved Amazon up here and you're thinking of taking a dollar cost average approach, you're getting 25% off down here, okay, which isn't the worst. Yes, if a hard landing recession came 2 years from now, maybe it goes somewhere down here in the low 100s. We would, by that time, I look at some of these bigger moving averages, like on the monthly, maybe it goes down to 114 or even 80, something like that. And I know it seems crazy, like, why would I buy it now if it's going to be 50% off? Guys, we don't know if it's going to be 50% off. So again, that's part of you making a plan and seeing, if you're going to dollar cost average in, maybe you do a certain percent of what you want to now, and you increase the percent as it goes down into deeper value. Okay? Because if you like something here, you should love it here. When there is extra fear in the market, that's when you need to look for those opportunities. Let's move on to Google. So Google, now you can see, well, we're at the monthly. Let's get off the monthly. And the weekly, it's dipping down below 50. Look how rare that is. It usually touches down here in late 22, early 23. It was down there. But in recent history, been pretty rare. And as you can see with Google, it has bounced each time off the 50. So it's possible that happens. Now, when we drew this fib from the prior high to low, we were looking at that 1618 at 193 as a possible price target, and Google pretty much smacked it. It got really close, maybe, just within a couple bucks, but pretty much got right up to that fib level, couldn't get underneath it. So right now we're going to see what's Google going to do. Like the couple times before, is it going to honor that 50-week moving average and bust out of here? That's what it's done before, and it looks like great value now. You can also see that it has had a nice bounce off the 200-day. The 200-day and the 50-week moving average tend to be pretty close to each other. But look at what happened in the RSI, guys. Bottomed out, started rocketing off. Okay, bottomed out. Are we going to see something similar again? Or maybe something a little different? Right now, it's got this 5-wave pattern down for any of you Elliott wave analysts out here. So it's possible that was an impulsive move down and we get a 3-wave corrective movement up before possibly going down further. That can happen. I've seen that happen. But right now, if this is bottoming, you're getting 25% off. Or sorry, that was Amazon. Let's double check this. Got the 20% off right now, maybe 15%. So deeper value on Google. Let's go over to Meta. Man, Meta's looking very green today. It has gone up quite a bit. So Meta, we're looking at this fib as a target, this macro fib. When I drew the high to low, if you take it off log scale, which you can see by the extra space down here, 568. 568 is my high target for Meta, should it get up there. Now, on the weekly, the strength kind of leveling out. We'll see. Maybe it gets down to the 50-week. When's the last time Meta's been at the 50-week? Well, last time is when it broke through it in early 23. So let's go over to the daily. Look at that. The daily is telling us a bit more. So we can see what the moving average is. Meta tends to have these pretty good bounces, well, at least ever since it hit it. Once it got a little bit bearish or sideways, it's been having good bounces off the 100-day moving average. Now, almost getting down to the 200, and maybe we probably could draw a fib in here, maybe from this most recent low. I'm curious, does that show us anything? Yeah, kind of. That it got down. Look at that. It got down to the 382, and now it's just at the 236. Too much going on there for my liking, though. But right now, Meta, it got back above the 50, so looking pretty good. These wicks, we do have lower highs. We do have this little wedge formation forming, so with that, we could draw some trend lines to kind of show what's going on here. With that being said, sometimes when you get in these tight little wedges, you can have big movements up or down. So just be on the lookout for that. As far as, all of a sudden we have this big correction. The sky was falling. The VIX higher than it's been since the great financial crisis and COVID, or, the third highest one. And all of a sudden we're getting this nice correction. Everyone seems to have forgotten what happened, just 5 days ago. So, I'd just say be on the lookout. But if all of a sudden this dips down further, and you hear bearish sentiment, that tends to be the time where my ears start perking up, my eyes start opening wider, and I'm looking for bigger deals. So, try to be the opposite of what all the talking heads on CNBC are telling you. They're trying to psyop you guys. They're not your friends. They're usually not honest. Last Mag 7 stock, let's take a look at Tesla and zoom way out. So Tesla, we've talked about how it keeps hitting these trend lines on the bottom and the top, and it recently had a breakout. Now you see it got overbought here, okay, overbought here as well, and has been in this downtrend, okay. Now when we go to the monthly, something I notice is, did it really invalidate this wedge pattern? And when you go to the monthly, you can see it only wicked above. So in my opinion, not so much. And on the monthly, by the way, what do we see there? Doji candle. Doji means undecided. Now, if all of a sudden it starts breaking up, okay, cool. Happy for you Tesla guys. But it could also continue going down as it is right now. So right now, Tesla looking pretty bearish in the oversold area on the weekly, on the daily as well. So right now it's looking pretty bearish. On the daily, it got underneath these moving averages. We had good moving average support, this 0.5. It does look like it wants to get down here, possibly to 174 at this 382 fib. Let's go over to the weekly moving averages again. Yeah, right now, I can see why the monthly has that doji, because weekly, this candle, it has everything. It is right on top of our 100, our 50, our 200, our 0.5 fib. It is on top of all that stuff right now. And so it is undecided. Hey, does this want to keep going up or down? So Tesla, I don't love it here. And I've talked about this before. I love the balance sheet. All Elon Musk bias to the side, whether positive or negative. Something I can't get my mind past, why I won't be a Tesla buyer, at least for a while, is its market cap. It has typically been between 10 to 20 times higher than Ford and GM. I know Ford stock absolutely sucks. It's been 10 times higher and has half the revenue of either of those companies. Now, you can call Tesla a tech company if you will, but they make most of their revenue off of being an automotive company, something like 90%. So unless that changes, unless we are going 50% plus with self-driving cars and that's the future and they're all going to be Teslas, I'm not quite convinced at its current valuation. I love its balance sheet. They have a great balance sheet. I think they'll survive a recession quite well, unlike the likes of a Rivian, which is just going to absolute hell. But Tesla, there are things I like about it. However, I think its valuation is still a little strong even for me. Kind of like how Warren Buffett was talking about Apple. Not that I'm Warren Buffett by any means. That's kind of what I'm viewing Tesla's. That's valuation. Just too much for me for, comparing other stocks that it would be most similar to. I don't see it as a tech company. But anyways, comment below. What do you guys think about this analysis and this dip? Do you think the recession is now and that we're going to continue going lower? Or do you think that we are going to continue to have volatility, possible new all-time highs until the end of the year, possibly, with the Fed more than likely to cut rates in September? So let me know your comments below. Which of these stocks do you like, not like? What are your thoughts on the current state of the market and in the future? Thank you guys for watching. Have a wonderful day.